this a shakeout or is it going to be a fake out on the bull side? Is it going to be a trap? Well, somebody's going to get trapped. Is it going to be the bulls or the bears? That's what we're going to cover in today's show. So look at the crypto bubbles chart over here, or the banter bubbles chart. You can see massive bounces across the board. I'm sure that it's no secret to any of you who are awake or looking at your mobile device right now that we had a massive bullish engulfing candle. So typically that suggests that there would be continuation, but if this move were to get retraced, it would be incredibly bearish. So we're going to go over the exact levels that you need to focus on moving forward, and let's get started with the show. So I wanted to start off with a review of the last 24 hours because it's been absolutely insane. If you look over here at the 𝗕𝗍𝗪 over the last 24 hours, what's happened? Number one, Binance was sued by the SEC with 13 charges. Number two, Coinbase was then sued by the SEC for acting as an unlicensed broker. 3, the SEC filed court documents to freeze Binance US assets. That is a very big one, very scary indeed. Number 4, Binance accused of running a illegal exchange in the US. Number 5, Coinbase says that we will get the job done in court, meaning that they're obviously going to challenge the SEC. And it says over here, we are about to see some of the most historic court cases in crypto history. These lawsuits will define crypto forever. So definitely got to put our best foot forward and hope that Binance and Coinbase manage to defend their case and pave the way forward. So this is how history is made. You know, usually you have people standing up for what they believe is right and fighting that through in court. So definitely going to be rooting for them to win that. And if you look over here from DB, the SEC seeks to temporarily restrain orders to freeze Binance US assets. So very big deal. And if you look over here at what's going on with Gensler, I find this pretty interesting. Definitely put on your tinfoil hat for this one. Nothing like a good conspiracy theory early in the morning, but let's have a look at this over here.
As you all know by now, the SEC is suing Binance and Coinbase. After the news came out earlier today, Gary Gensler went on CNBC and he said something very strange during the interview.
Look, we don't need more digital currency. We already have digital currency. It's called the US dollar, it's called the euro, it's called the yen. They're all digital right now.
After I heard that, I thought to myself, why is it important for Gary Gensler to be giving his opinion on if we need more digital currencies or not? He didn't even mention blockchain technology and all the potential that comes with it. He just said he doesn't think we need more. And that makes it very clear that Gary Gensler has motives outside of just protecting investors.
So could it be that they're trying to roll out Operation Choke Point 2.0 because of CBDCs in the future? Well, that's definitely a real possibility. If you look into Gary Gensler's history, he knows blockchain technology very well. He was actually a lecturer at MIT for a certain point in time, and he was a big promoter of the crypto Algorand, which he labeled was not a security, and now they've come out to call that a security. So following that, there's a whole list of so-called securities in this SEC lawsuit case, and these are kind of the coins, whether they listed on Coinbase or Binance. A nice flow diagram over here. You can look at Binance on the left hand side. You got Atom, BNB, BUSD, and 𝗏𝗏𝗧. Coinbase on the right hand side. You got Chiliz, NEAR, Flow, ICP, VGX, Dash, and Nexo. And then listed on both those exchanges is going to be the middle ones: Solana, Cardano, Matic, Filecoin, Sand, Mana, Algorand, which is one that again Gary Gensler did promote, and then you have AXS. So let's see how this unfolds, but I'd imagine from a price standpoint, it is definitely going to be difficult for these coins to rally in the face of what's going on now. If you have a look at what happened with XRP once the lawsuit started to come out against them, it pretty much started to grind down from that point onwards, and it was only speculators who have been buying XRP in anticipation that XRP are going to win the case, thinking that they're going to turn a couple of thousand into $1 million, which I don't necessarily think is the right approach to take. I think it's better to stay outside of these Venn diagrams or the circle. If you ask me, I think rather go for things like Bitcoin, ETH that are more than likely going to be safe in the short to medium term. So let's look at Bitcoin price and what that means going forward. Well, if you look at the price action over here, you have a monster candle. Look in relation to this candle over here, which obviously led to major continuation on the left hand side. That was all the way back from the 6th of March 2023, so earlier on this year, this was the USDC DPEG. And basically price came down, looked like things were going all the way back to new lows. And then suddenly demand kicked in and led to a major reversal candle. Now, this is why this week is so important. If you start to see this candle close in the same fashion, whereby it's a doji candle, so massive long wick and a small body towards the upside, even better if it starts to turn green, then you can expect a continuation, and this would be now confirmed as your next high low. So at what point can you actually say this is a high low? Well, you'll need to look at this area over here that I've marked off. Once you start to take out the previous week's open and close, which is the close on the left-hand side from the 22nd of May and the open of this candle on the 29th of May, which is at 28,000. As soon as you start to break above that level, you can confirm without a shadow of a doubt, this is your next high low, and you can look at prices running a lot higher. So if you look over here at 𝗕𝗏𝗏, he gives a great analysis over here of Bitcoin on the 1 week time frame as well. And if you look at that, you'll see you have the inverse or the perfect inverse head and shoulders bottom, which is formed below the weekly simple moving average 200, which is the blue one over here. Then we obviously broke back above that, and then you have a successful triple bullish retest of that neckline. So coming into the neckline in a falling wedge fashion, and if that starts to break out, you start to break out of the upper side, which is the same thing as what we're looking at on the daily as a potential bull flag, then you have confirmation that this is probably going to play out, and the measured move off of this head and shoulders, if I'm not mistaken, is deep into the 40K region. We don't need to focus that high up. Let's just take it level to level. First area of interest today is going to be, let's see if Bitcoin could start to close above $27,000. Then next, we're going to be looking at about 28,200, and that is a big level for Bitcoin to get through. If it can get through that, then great. You're confirming your higher low on the high time frames, and you're starting to break out from those levels. And if you look over here at the Gaussian channel, you are currently still holding above those EMAs. So currently I have the 9 and the 18 EMA, the 9 being the white, the 18 being the yellow. As long as price holds above this, historically this has boded very well for the bulls. You get the golden cross over here, so the 9 crosses above the 18, price holds above, come back into retest that, and then those moving averages have a chance to start to spread. Now we need to reclaim back above the 9. We've reclaimed the 18. We need to hold and close above that and start to move this back on up. If you can do that successfully, then of course you have a chance of breaking these upper targets between that $28,000 and $30,000 level. I think once you can safely get on a closing basis above this 30,000 level, not only do you break the lucid SAR, but you also break the major swing high at the top of here, the local top, which led to the breakdown. So mark those levels off on your chart. It is going to be something worth watching in the days to come. You can see there I have the level marked off. Break and close above that, and you have continuation going up. ETH BTC still looks relatively good. I'll show you on the Bitcoin dominance. There was a major move to the upside yesterday, and that's the reason why the ETH BTC chart came down. Remember, ETH BTC is a measure showing how Ethereum is performing against Bitcoin. If this chart is going up, it means Ethereum is outperforming Bitcoin. If this chart is going down, it means Bitcoin is outperforming Ethereum. So currently, this is where the battle is taking place between ETH and BTC. And the question is it going to hold above the mid-range? If it holds above the mid-range coming in at 0.069, that's the ratio of ETH to BTC, then you would expect continuation on up, and your next target becomes the 0.75 level. That is 0.75% or 75% of the way through the overall range. Remember, this is the range. You got your range low, 0.25 level, mid-range, 0.75 level, and then your range high. So we'll be focusing on getting to that 0.75 level for ETH against BTC. Others are still struggling. It's still contracting down. Remember, this is kind of on a zoomed in level what we'll be watching. We want to see if it loses this main trend line over here, the diagonal trend line, then revert to the second one coming in at 849. And if it bounces off that and starts to reclaim, then you have your signal to go long. You don't just blindly long as it's moving down. All right. While we're at it, guys, take 1 second of your time. Please smash the like button just to help to get the content out there. It really does help to get the algorithm going. I'd really appreciate it. Smash the like button. And then also let me know in the comments if you managed to play the long side yesterday. On the show yesterday, I did mention that I played the long side. I made a tweet saying that I bought at 25,700 and I thought that there was a chance that price action was going to be front run. The ultimate buy the dip level still remains between that $23,000 and $24,000 zone. I will show you those levels on the low time frame. Let me know in the comments, did you manage to get longs in or were you left sidelined? So I can see we got everyone in the house, Chaos, Jockey, Antonio, Knight. We got Frank, we got Dion, B-Knock, we got Victor, RT, Leo, Shanga. Thank you guys so much for joining. I appreciate each and every one of you. All right, moving on to Bitcoin over here. Big move up, but it's not out of the woods yet. You can see contending here with a major level of resistance at 26,800. We really need to start to push above this level, more specifically get above $27,000 and close there. If you can, it will be looking good. Ultimately, from a structural standpoint, so from a textbook and textbook perfect entry level, you still would be looking at this green box zone. Anywhere between this lower region at about 22,913 is the level I have marked off, and the upper side at 23,911. That is your ultimate buy the dip zone. If you do see price come back into that level, that is a gift. So the reason why I went in 50% already beforehand, as I had mentioned yesterday, if you missed that video, it is still there. You're welcome to go and watch it. I basically said that I think that over 8%, when this could be a great buying opportunity, I'm willing to take a little bit of a drawdown because price was only 8% away from where I wanted to enter. So I entered 50% of my capital into a spot position. I would have entered the next 50% in over here. And then if price started to move up from there, I could start to scale that into some margin trading accounts. But this is the nature of the game. Experience will trump the technicals sometimes, and I've had experience with this, guys. I was left behind. My orders are still there. $3,583 specifically. I remember I placed a massive order over there for Bitcoin. Price went down to within, I think it was within like 1.4% of my entry. Missed my entry with my entire net worth stacked there, ready to buy the dip. And obviously we went straight up to 69K from there. So I lost. I did get back into the market at a later stage, but I lost a huge amount of opportunity by being too greedy on the entry. And that's why sometimes experience will show you when the market might try and front run something like it did yesterday, and then you get the big move up. So it doesn't mean I'm holding this generationally, right? I'm not going to hold it forever. I might even take some off the table now to bring my cost basis down, because if price does start to reject and move to low regions, I'll be taking some of the profits off of the table here and then re-entering it at lower prices. So I hope that helps. Okay, let's look over here at the S&P 500 futures chart. You can see it does look like a big old mess over here. So we've had multiple different formations which were forming. At first, we were within this expanding megaphone formation pattern, with this being the ultimate main target. We got quite close to it, but we didn't yet touch it. That was where the wick low came in. Now, the next pattern that we started to focus on was a range that was developing, and now you can see prices continuing on up. So eventually I'm going to clean this chart up, probably for the next show. I'm going to be deleting everything and cleaning it up. The only thing that I want to outline to you for the time being is this area over here. This is your next draw on liquidity. It's coming in at $43.27.50. That's $4,327.50 for the S&P 500. Watch that area carefully. We're very closely within, as they say, spitting distance of it, which means that if that liquidity gets tapped, then you might experience a little bit of a pullback, not calling a crash or anything, just simply a bit of a reset and a pullback from that zone. And imagine that obviously the correlation to crypto means that prices will probably pull back as well within crypto. And that could be your opportunity to get in if you miss the move. All right. Looking at the dollar over here, the DXY, still have continuation onwards and upwards. And so far, we are not breaking below that T1. As long as we're above 103.4 on the DXY, I expect continuation onwards and upwards, and I'll be targeting towards T2, which comes in at 105.79. So this level over here, 105.79, that is your next major target. Here's the dominance. So remember, the dominance is sitting within a major range over here. This is the range. It's been range bound for the good part of a year, at least exactly 1 year, or just over 1 year actually. And you can see yesterday we threw in this pink box over here while we were live on the show. I said this would be your next support zone, despite it breaking down from a wedge formation pattern over here. And look at the massive impulsive move off of that level. Big move to the upside. And that's why when you are looking at patterns, you have to be aware and cognizant that these are not stuck in stone, right? It's not set in stone. These patterns can merge and form. So what may start off, for example, let's grab a triangle over here. All right, so if you see something like this, what may start off as a pattern like that, as a perfect wedge, could then form into an ascending triangle. It could form into a descending triangle. It may even form into into a range. Let's quickly change that up. This is just a free lesson for you guys. There you go. It may change into a range. You have to move with the ebbs and flows of the market and understand that the market can pivot and the market can switch and change form. So that could be something that's going on over here. This line is probably not relevant anymore. Then if you look at that now, it is still technically a bull flag, right? If you look at the Bitcoin dominance, it is still technically a bull flag. Price coming up with your pole, and you're creating your flag formation over here, which does have a high probability of breaking towards the upside. So this is where you get your edge, right? You have to be adaptable. You don't want to be stuck in your ways. The worst thing that you can do as a trader or an investor is to be stuck in your ways and have pride and arrogance thinking that you're always right. When you do that and you can't take a loss and accept that you're wrong, you're going to get absolutely wrecked. So don't be that guy. Be willing to change with the new information that the market is giving you. All right. With that being said, also CoinW, this is a new sponsor that I wanted to introduce you guys to. They are an exchange. If you live in the US and you are struggling to get an on-ramp into crypto or a place to trade, this could be a great opportunity for you. There's no KYC that's required over there. And if you live in the US, you can actually use them. So the way that I figure how these things work is, right, these guys do everything legit according to the book. They set up the exchange, and then usually what happens is it takes a couple of months before the regulators catch up to them, and then at that point they're faced with a decision. Are they going to bar the US citizens from using the exchange, or are they going to go and comply with whatever regulation requirements may be necessary? So you kind of in that gray area with this exchange right now, whereby it's fresh, it's new, nobody is bothering them. It has everything is perfect on this exchange. I've already checked it out. I've used it. They have plenty of pairs, plenty of liquidity. So if you do want to check that out, there is a sign up bonus in the description below. Just click on the link over here. Let's quickly go through. So click on show more over there, go through to CoinW over there. You can also win what do they have for you there? A MacBook Pro. If you use the link, you can win a MacBook Pro. Make a small deposit, check it out. Doesn't have to be big, $20, $100. See what that exchange is all about. All right, super Guppy indicator over here. Let's look at it on both Bitcoin and Ethereum. You can see big move off of the 200 exponential moving average over here. Well, it didn't actually touch it, but it got very close to tagging it. So below the yellow areas is where you have your ultimate buy the dips zones. Now, again, it's not guaranteed that price is going to come into that level like we had back over here. This was a high probability trade idea. You came into the value zone and big push off, and then obviously the super Guppy turned green, indicating that it's a trend move that may begin. And same thing over here. If you do see price come back into there, where's that level? Well, it's going to be again between 23,300 and about this $25,000 level. That is a good area to bid. If price starts to hold underneath this 200-day moving average, it's pretty much over for the bulls, and then you have to start to look for lower prices and say that this is not a fake out anymore towards the downside. This is now full-on continuation that you would expect. So I don't expect that price is going to dip below like this and then just immediately reclaim. I think that once it comes into this, it should technically hold this level over here. So keep that in mind. What about Ethereum? Ethereum over here is currently showing, just let that load up. There we go. Okay, Ethereum is super guppy, has already turned green. Again, ETH has outperformed BTC, so it is front running the entire move. Here you have, this would be your value zone over here, coming in between about 16.12 and 17.26. If price does come back into that level, again, I will be bidding that level. I think it is an opportunity in the same way that it was back here. And the reason why is because, right, look at your moving averages. They are starting to trend onwards and upwards. It's very, very important that you take that into context. If you look over here, would I have done that over here? Of course not, because price is capped below and it's moving down. So if it broke above over here, let's just say hypothetically, you have your 200 MA trending down, price is over here, and it reclaims this level, would I start to bid that? No, I wouldn't. Why? Because the MA is trending towards the downside. There's a structural difference which has taken place over here, and that being those MAs have reset and are starting to move onwards and upwards, which is indicative of a healthy trading environment. Next, let's look at this chart over here. So same thing. By the way, if you zoom out, this also looks like a massive cup and handle formation. Let me quickly turn off some of the indicators for you, and I'll show you what I mean. So if you look over here, we're viewing this as a bull flag, right? But the bull flag is also a massive cup and handle. So there is your pole. Here's your flag formation with a potential breakout towards the upside. If you look over here, what does this look like? A massive cup, and here is your handle, which is the same thing as the bull flag, right? So there is still bullish structure which is in place, and you definitely have to give the bulls the edge and the benefit of the doubt for the time being, as long as they can start to hold price above their pivot levels, right? What is the current pivot level today on Bitcoin? Your pivot level is coming in at 26,745. And on Ethereum, your pivot level is coming in right where price is now at 1,876, and it still is holding above the 12 and the 24 EMA, which is also good, and those are starting to turn back up. All right. But there is one big elephant in the room, and the elephant in the room is going to be the key monthly levels. It's the weekly open as well as the monthly open. So let's zoom in over here on Bitcoin. I hope you guys can see that nicely. I know that it's very, very dull, but if you look over here, I have it labeled on the right-hand side. That is your weekly open. That is your monthly open. Point being, as long as price is capped below the weekly and the monthly open, technically speaking, you do have a short trade opportunity and prices could be going lower. So what would that look like if you were to take this trade, for example? Any push that comes into those levels. Oh my gosh, here comes the paparazzi. Is Rand taking the show again? The hijackers are back. Okay, let's go. This part Rand definitely can't do. This part Rand can't do.
What are we reporting on?
No, you've got this.
All right, so
that's a good Bitcoin bounce. Like, I'm not gonna lie. Like,
so
massive engulfing.
It's a massive engulfing candle, and what's very good about this engulfing candle is this is where we started before the Binance FUD. We were at 27,000. When the SEC attacked one company, which was Binance, we went down all the way to 25,300 or 25,400. But then when the SEC took Coinbase on, so as soon as the Coinbase news broke, Bitcoin was actually at 25,600, which was just about here. And then what happened was the price of Bitcoin started to climb to even a higher level than where we were before the bounce. Now, what is the significance of that? When the SEC took on Binance, the market was very scared. It said, the SEC is after Binance. Binance is the biggest exchange in crypto. It's very, very, very scary. But when they went after Coinbase 2, what the market said is, this is not about Binance. This is about shutting down crypto. And the market now has a certain type of relief. And the relief is to say, it's based on Brian Armstrong's tweet yesterday where he says, we're going to get regulatory clarity, and we're going to get regulatory clarity in the courts. Because what the markets realized is that if we carry on with these games, the SEC is going to not give us regulatory clarity, and it's going to destroy crypto. If we do go to court, we're eventually just going to get the regulatory clarity. So Coinbase is now in for the fight of its life. There's no doubt about that. But I think that what's going to happen is the market is actually, if you ask me what this candle is, it's an engulfing candle, but it's also a celebratory candle. The market is celebrating that someone is now picked up the fight and is going to go and get regulatory clarity on behalf of the market. And that's what this candle here is all about. So now as crypto users, I think what you got to do is you got to support Coinbase, because you need to support Coinbase to go and fight the fight of their lives so that we can get our regulatory clarity. There's two fights here. One is Coinbase, one is Binance. The two are very different. Binance, 13 charges of commingling of funds, promoting of unregistered securities, etc. Coinbase, only 4 charges, and all the charges are failure to register securities offering and stuff like that. The first fight is a harder fight. The 13 charges is a harder fight. There may be Department of Justice stuff. The Coinbase one is different. It's 4 fights, and they all fight against semantics. So if I were to give you guys an analogy of how I think these two fights play out, the first fight is where you're playing the man and the ball. The second fight is where you're just playing the ball. And so the Coinbase fight is just playing the ball. So this candle here, we can call this candle here a celebratory candle. And I think if you did watch my show, I said that we were going to go back to this and the market would forget about it in 24 to 48 hours. It happened in less than 24 hours. All right, so I'll see you guys again later. Until then, trade well, my friends.
No, don't end the show. All right, we're back. Do not leave yet. Okay, guys, cool. So that is, I definitely agree with everything that Rand says, 100%. So it is important, exactly what I said in the beginning. We definitely have to side with Coinbase as well as Binance, hoping that they obviously win their battles, because that is going to usher in the new legislation, which will pave the way for crypto, right? So very, very important. But with that being said, the weekly and monthly open, a lot of traders will be taking the short trade. I myself did not take this short trade, but it does technically make sense. So until such time as price can break above this level over here at about 27,500, why that level? Well, you need to get above the monthly open, the weekly open, close above that level, and you need to break this long-term diagonal, right? The diagonal that's been holding the lower highs ever since we set the major top at $31,000. So if price were to come back down into this level, it's range to range, right? Or level to level. You're moving up towards the mid-range level, fail that level, come all the way back down to the bottom of the range. So that is one thing that I'm watching. I personally am not taking the short. I'm staying on the long side. I'm only looking to add to my positions if the opportunity presents itself. So I've highlighted this pink box area because it's a major pressure cooking zone. Why is it a pressure cooking zone? Well, everything comes down to this level, and you can expect that there's going to be major volatility out of here in the next couple of days. How long if you had to drag this on? Well, I would say probably it could go for the rest of this month, but by July, you should have some sort of decision. You'll reach the apex of this potential move. And if you look at it, I'll zoom in, it looks like this, right? Firstly, long-term diagonal down or the trend line that's holding the high lows. That's the longer term one over here, diagonal trend line. Then on top of that, you have the diagonal downtrend. On top of that, you have your range over here, right? You're coming into the range low section. And then if we zoom in, you have now as well your moving averages, which are serving as resistance over here. This is on the 4-hour time frame. You can see the rejection from the 200 EMA. Very, very important to get back above that level. So I think there's going to be a lot of volatility within this region. If you do see prices retrace all the way back down to here, expect they're probably going to move all the way back to the top. And if they get to the top, it's basically going to be a big wishy-washy zone to trade within. It's going to be choppy. Price is going to move all over the place. And you can see already price is pulling back over here off of that 200 EMA. So once you start to close your first 4-hour candle below the 50 EMA, which is the red one over here, then you can say, well, now there's a potential that price will start to retrace. I've used certain levels over here. If we have a look, I've marked off the 0.382 fib retracement level, which comes in at $26,619. Again, $26,619. That level needs to hold. That is your shallow fib, right? So in a trending move, if it is that bullish, you would expect that bulls would want to pick up price around this $26,600 level. That's the zone that needs to hold. If you start to break below that, you risk retracing the entirety of the move. And then, of course, that's going to be very, very bearish, because you can imagine, think from a psychological standpoint what's happened to the majority of traders, right? So a lot of the guys had chased price up. They are buying price around here. Price started to draw down. Once it started to break below, then over here, they panicked out. They sold their position. Price then started to push up. What did they do? And this goes for as well. There's two camps, right? The guys who were in the position, they puked out their position at the low. And then there's the guys who are waiting for lower entries down here at around that 24K level. So now the big move started to take place, right? Price went up. They started to get FOMO. These guys that were holding thought, damn it, I made a big mistake. I need to jump back in. Let me know if this is you. This happened to me many, many times in the past. So nothing to feel guilty about. It's typical trader emotion. And this is why you have to have a strategy. So now price is going up. You had already sold over here. And the guys that are waiting here are like, damn it, price is running away from me. I missed my entry. So these guys jump back in who sold. The guys who missed their entry also jump back in. It pushes price higher. You come straight into a liquidity zone over here. Rejects, price comes down. As price is coming down, these guys think, damn, I can actually get my entry back where I initially thought. And the guys who sold thought, flip, now I'm getting doubly wrecked. And they basically all just sell and price comes all the way back down. Thus, you just end up creating a massive range. So this being the range, right? Here's your range. Big up, down, you see kind of swings like that. So be careful that you don't get caught in something like that. Make sure that you have a strategy and a plan, and monitor your risk very, very carefully. You can see over here, if you look at high block capital now, the majority of the liquidity is towards the downside, which is why it would make sense that you might see a bit of a retracement into these levels. So main liquidity is coming here around that 26,500. Very, very important zone for that to hold. Then also look at the funding rates. We went from extremely negative to extremely positive. Again, these are the guys I'm talking about that puked their positions out over here. They're jumping back in, immediately flipping long on leverage. And this whole move is being leverage driven. So I'm marking off these levels. I've used an indicator over here, by the way. This is from 𝗧𝗐𝗍. They are now an official sponsor. I'm very glad to have them as a sponsor because I love using their indicators. Absolutely fantastic. This is the price action concepts indicator, which I have, which essentially it shows you the order blocks. And very, very interesting. Look at how price came directly into that zone. I used this yesterday to help me to time the entry. Once I saw that had printed, that's one of the reasons why I entered in. You had 25% of the volume kick in. It shows you your percentage over here, and price moved up. Look at that. You wicked directly right into the middle of this order block at the 50% level. You had a 9% volume that came into that zone, and consequently price started to reverse from there. So if you're interested, check out 𝗧𝗐𝗍. There is a link in the description below. You get 30 days for free, and you can get 30% off if you sign up using my link over here. So 30% off the indicators. Type in the promo code, the KD30. All right, guys, that is it from me. Thank you so much all for watching. I appreciate each and every one of you. I hope you have a stellar day out there. Don't get trapped in the very, very wicky and volatile price action, because the market is still processing everything that's gone on. So expect that this trend is going to continue. It's going to be range bound, up, down, all around, until such time as the market establishes more confidence. So I'll see you all on the next show. Have a great day, and cheers for now.